Hi and welcome to Banking 101. During this lesson, you will be able to identify 4 reasons to use a bank, identify types of financial institutions, identify 2 types of deposit accounts, and identify the steps involved in opening and maintaining a bank account. Identify the cost between banks and check cashing services. Do you put your money in a bank? Here are some reasons why you should put your money in a bank. Your money is safe from theft, loss, and fire. You can get money quickly and easily. A bank can be cheaper than using other businesses to cash your check. The Federal Deposit Insurance Corporation, or the FDIC, will return money to customers if a bank closes. There are 2 major types of financial institutions: banks and credit unions. Banks make loans, cash checks, take deposits, and offer other financial services. People who have something in common with others use credit unions. Credit unions take deposits, make loans, and offer other financial services. The Federal Deposit Insurance Corporation, also known as the FDIC, insures bank accounts for $250,000. If the bank fails, the Federal Deposit Insurance Corporation, or FDIC, will return your money. You can tell if the FDIC insures a bank by looking for the bank's FDIC logo. The National Credit Union Administration, or the NCUA, insures credit unions. Deposit accounts are accounts in which you can deposit money. Checking and saving accounts are 2 examples of deposits. With a checking account, you can pay bills and buy products with the money you deposited. One of the advantages of having a deposit account is the interest or the money you earn. There are basic things you have to do to open and maintain a bank account. 1. Open the account, and 2. Make deposits and withdrawals. The first thing you need to do when you open a bank account is a process called account verification. Account verification tells the bank you are a responsible customer, you are who you say you are by confirming your identity, and you can legally open a bank account. When you decide on a financial institution, ask what type of identification you need to open an account. Usually you need a driver's license or ID card. If you are not a citizen of the United States, some banks may accept other forms of photo identification, including your green card or passport. You also need a social security number, otherwise known as SSN, or individual taxpayer identification number. A deposit is money you put in your account. When you put money in your account, you must complete a deposit slip. Deposited checks cannot be withdrawn immediately. You can only withdraw a part of the check. You must wait until the money is available. The bank does this because the bank needs to make sure the person who wrote you the check has the money at their bank. You should ask the bank when you can use the money you deposited. When you make a withdrawal, you take money out of your bank account. You take money out of your bank account when you write a check, give the bank teller a withdrawal slip, or use an ATM. A withdrawal slip looks similar to a deposit slip. You use a withdrawal slip to take money out of your account. Financial institutions may charge you fees such as a monthly fee to keep your account open, a penalty fee if you misuse your account, like taking out or spending more money than you have. Banks may charge monthly fees. It is much cheaper to use a deposit account at a bank instead of a check cashing site. Here is an example of why. Jane uses a check cashing site to cash her checks. She cashes 4 checks each month and is charged $5 each time. That means she pays $20 a month or $240 a year to cash her checks. John has a bank account that charges a monthly fee of $5. In this case, using his checking account for 1 year costs him $60. Using a bank in this situation saves $180 or $240 minus $60 a year. You should now be familiar with banking services and build a positive relationship with a bank. This will help you establish a record of paying bills, saving money, and getting credit. For more information about banking and other financial resources, please call 410-396-3228.